Welcome to our weekly homebuyer seminar. I'm Bill Gross, along with my friend and lender colleague.
Shannon, the lender.
And you might notice, if you're a regular fan, we're missing the eye candy of the team, the top listing agent of the team, the big kahuna, Patricia Castillo. She's out with on another program today. So you get us today, but we talk about home buying, whether it's your next home, your first home, how to qualify, how to get a home, where the market is. And, we always want to start off with a review of the interest rates. Interest rates went from like 7.01 to 6.9 to 7.01. For such a small change is a pretty significant number, that first digit being a 6 or a 7. Shannon, have you got any feedback from people as far as where the markets are, where the rates are?
Yeah, I mean, so a lot of people are seeing online, a lot of people are seeing that, hey, feds are saying that they're dropping rates. Why are the rates not dropped yet? A lot of people have to understand that the feds, when the feds announce something, it's mainly for consumer debt, credit cards, car payments. When it comes to mortgages, you actually want to look at the 10-year treasury. And that's the treasury security. If you look up, and I'm going to show you, I don't know if you want to pull it up or not, but if you look up
Yeah, I got it right here. Hold on.
10-year treasury yield over the last 5 years. If you look up the 10-year treasury over the last 5 years and look at that chart, it's almost going to mimic the 30-year. You see that? You see how it spiked?
Yeah.
It almost mimics the interest rates on loans. So if you look up, 10-year treasury versus the 30-year conforming, conventional loan last 5 years. If you do, conventional mortgage interest rates over the last 5 years and look at that chart versus the other chart, you'll see that it almost mimics each other. So the first tab that you had was correct.
Yeah, but it was dated. It was a graphic from
Oh, okay, got it.
2014.
And you see how it spiked up just like it did interest rates.
So this is April.
There you go. You see how
that's even back in April now. It's so interesting how hard it is. Let me see, get something last.
Yeah, I think the first one that you had, I probably, oh yeah, I said it's dated, right? Let me see. Actually, I'll send you a link.
Wolf Street. That's one we're going to see right here.
If you look at Fred, actually put the comment here. This is the one I look at. I put it in the comments there.
In the comments. Okay.
So if you look at that one, and then I'm going to share with you another one. Here, hold on a second. So you look at this one. So this is the 10-year treasury yield, right? You look at that. Now look at that chart. Now look at the other one I just sent you. This is mortgage rates. If you look at the last 5 years, and then you look at the other link I sent you in the comments.
I got both of them there. So there's a 10-year treasury and there's
10-year treasury,
mortgage.
30-year mortgage, right? Do the last 5 years. Or you can just do the same date as the other one, yeah. Like copy the before date. Yeah. Copy that one.
Okay. So there's 2009, 2024.
All right, and let's go back to do 5 years probably. Or I can just click 5 years, I guess. It should do the same.
Yeah. Okay.
So look at it. Look how almost similar the 10-year treasury versus the 30-year mortgage.
Yeah.
It's almost similar. So if you guys out there are looking to buy a house, do not look at what the feds are saying. You want to look at the 10-year treasury, because this is the reason why. And this is my hypothesis, right? Purely hypothesis of why everyone thought after the election rates are just going to go down immediately. They actually spiked up a little bit. The reason why is, I think, this is my hypothesis, I think people are taking their money out of the 10-year treasury and putting into stocks, businesses, private equity, because they think, hey, we're gonna make some good money. So now the 10-year treasury has to go up to be enticing enough for investors to still invest. Now, doesn't mean that they're not gonna settle down and go lower eventually, right? But as of right now, that jolt of the news, they're probably thinking, hey, let's just put our money into private equity, put them on into stocks, make that quick, money, and then, eventually it'll go down. But you guys want to always look at the 10-year treasury, because that's what's going to dictate the mortgage rates. That's the main number. So I definitely want to, if you're watching this and having that little education, when you're looking at buying a house, don't look at what the feds are doing. Look at what the 10-year treasury is doing. And that's going to be a very, very similar indicator of where the rates are going to go.
Very nice.
So that's a good correlation now. And just to give you another tidbit, I think right now FHA 720 FICO, we're getting quoted right now at 5.75. So that's where we're at on the FHA side. But yeah, there's a lot of confusion because everyone thought after the election, especially with the party that won, hey, rates are just going to go down. Things are going to go great. I'm not saying they're not, but as of right now, today, they spiked up a little bit and people are asking why, what's going on? Well, look at the 10-year treasury. And that's my hypothesis. I think a lot of the big money put their money into stocks right now, trying to get that big return. And who's to say they're not to return it back to the 10-year treasury? But, the 10-year treasury has to compete in order for investors to come and say, I want to put my money here. They have to spike up the interest rates a little bit just so that can be enticing enough, as opposed to stocks and other stuff. Right.
Well, if you believe the hypothesis that a Trump presidency would lower interest rates, even in the best circumstances, that's going to be over time, because the hypothesis is he'll spend less money, which will cause less inflation, causing rates to go down. Well, he's not even president yet.
Exactly.
So the spending
is
kind of like, if you say to your your spouse, hey, I'm going to get the credit card and cut it off. Well, you still got the spending until they get the credit card, and then you still got the statement coming in the end of the month with all the spending that's gone on. So even if that's the case, and I'm not here making politics, I'm just saying let's dissect what the claim is and get to facts. It may be that Donald Trump lowers rates over time by cutting back government spending, but that's not going to start. The spending for the next 3-6 months, first off, through January is baked in. The next 3-6 months after that's already baked in as well. So it's going to be a while before you see that effect. It may be, but you don't want to wait 2, 3, 4, 5 years to buy a house, because housing prices are going up now as fast as inflation. You're going to fall behind further and further while you wait.
Exactly. I'm already starting getting calls after the election. People are already, moving and shaking. The real estate market's moving and shaking. So if it's moving and shaking now, imagine when the rates actually really go down, what's going to happen. So I think you're right. Don't wait. If you think, hey, as soon as he gets inaugurated, boom, it's going to fall. That's most likely not going to be the case, right? I mean, yeah, it's going to take, like you said, it's going to take a lot of time. Not a lot, but it's going to take some time to really reflect. And even if it does, do you really want to wait until that time?
Right. Well, and I think I told the story in the past where when I was a newer realtor, I've been in business. I was a mortgage lender before that, but I was a newer realtor when Barack Obama was elected in 2008. Mm-hmm. And like in June that year, everybody said, oh, I'll wait till, he's nominated. And then in the summertime it was, well, okay, he's nominated. Well, I must wait till he's elected. And then I would call people and it was, well, I'll wait till he's, inaugurated, which is January. I called January. Well, his policies haven't taken effect yet. Well, it could take years. I mean, Washington doesn't change stuff overnight. I don't care who the president is. It takes time to make these changes in the overall economy. And so the lesson I learned was that, deal with the cards that are in front of us. And by the way, all those people who waited from June of 2008 through, March or June of 2009, all lost out because houses went up that year by like 10%. Right. So they were waiting for something. Meanwhile, the train left the station, and that's, I think, what we're looking at here. I do think that if anything, there'll be a moderation of the spending, and that will, over time, lower rates in the long run. I do think people are more focused on housing. Here in LA, the rent control bill went down statewide. The crime bill got repassed to fight crime. And so I do think that, to some degree, we've hit bottom here in LA. There's a Proposition 36 was to turn around the prior proposition that decriminalized a lot of crimes, including any theft below $950.
I remember that.
So the Prop 36 on this initiative reinstated that law to where crime over $950 is whatever the standard is, and then we created some other things as crimes. And I think in general, whatever was done didn't work. It's not like you can argue about the theory of a crime bill, but in this case, we passed it. Crime went through the roof. Okay, let's try something else. We also got rid of our district attorney in Los Angeles, who, his thesis was if we don't prosecute crime, crime will go away. Well, how'd that work out in LA? Not so good. So, we had an assault right down the end of my block this past week.
Oh, wow.
Neighbor's son-in-law. So, I think, I don't want to get too political, but I think overall, I think things are heading in the right direction in Los Angeles. Nationally, I think there's a lot more hype about the economy changing. The economy is such a big machine that it's hard to change. It's like a big boat. You can't just turn it. It doesn't matter who's elected, how much you think about them. Other things can change. There are other policies that may. Immigration may change a lot. Foreign policy can change. But spending there's just too much bureaucracy to change the budget and change all that, I think. So anyhow, if it makes sense to buy a house, let's buy a house. And if it doesn't, don't. And which means you need to save money and cut your expenses and save more and get able to buy a house.
Yeah, I think right now is the time to save for sure, and make sure that you guys have all your ducks in a row. And regardless, because this is the thing, I'm actually working with a client right now because he was waiting on this news, but I told him get your credit fixed now. You know what I mean? Pay off those collections now, and now he's in a position to buy. And he saw something that he liked. And he wants to go after it. And I said, look, guess what? Now all the prep work that we've been doing, getting you pre-qualification numbers on what it would look like, making sure you're paying off your collections, making sure you're doing all these things that took about 2 months. Guess what? Now you're in a position and you have options. You have options. And if you guys look at a house on these online websites or online, whatever the case may be, and you're like, oh, I want to see this house. I want to do this. I want to do that. Did you guys get your paperwork in order to where when you see it, you can actually take action? Because I can tell you time and time again, a lot of people that they go and see it, offers are due tonight, tomorrow, and they're trying to rush and give me all the paperwork, do all this just to find out that, man, I still need work to do.
Yeah.
So if you stay ready, you never have to get ready. So step number 1, look at your credit score, look at Credit Karma. See, hey, what do I need to do? You guys know a lot of people haven't even seen their FICO score. I asked them and they're like, I don't even know what it is. Take a look at it. I think it's freecreditreport.com, right? You can get a free, I think 1 or 2 free credit reports a year, and look at it and see, what do I need to do? Do I need to pay off some collections? There's certain things you can do without a credit repair company, such as collections, such as your debt utilization. If you have a car that's $1,000, I always say make sure it's below 20% of your utilization, right? So if you have a limit of 1,000, make sure you're under 200. So bring down those credit limits and take off those collections. Make sure you're paying them off, and get yourself ready. And even if we're talking about down payment assistance programs, again, I always say that there's 3, technically there's 4, but there's 3 main pillars of a loan. There's your down payment and / assets, there's your credit, and there's your income, right? Those 3 things are really the main factors. Those are the factors, but those are the 3 pillars. Usually when one is low, you have to bring up the other 2. Meaning, if my credit's low, guess what? They're going to ask for a higher down payment, and they're going to ask that your income is solid, right? And if your income is not that great, right, you make sure your credit is great, and you have a lot more down to put for. Guess what? If you don't have a lot of assets, there's down payment assistance, but guess what? They're going to make sure your income is solid and your credit is solid, right? So usually you at least have to have 2 out of the 3 that are very, very strong, right? And like, let's say, for example, I have a client that, hey, my income is a little shoddy because I'm self-employed. Well, no problem. Do you have a more down? Can you put 10 to 20% down, right? We can go bank statement program or P&L, but that's 10 or 20% down, and your FICO score needs to be minimum 700. So when one goes down, the other 2 need to be a little stronger, and there is a loan for you, right? But you can't have 2 out of the 3 down, right? You can't have a bad FICO score and no income. You can't have a bad FICO score and you don't have a lot of down payment. right? You can have no down payment and no income, but a great FICO, right? You have to make sure at least 2 out of the 3 are extremely strong to at least get into something. Obviously, the ideal situation is you have all 3 ready to go. And if you want a conventional loan, make sure you have 2-year work history, make sure you have a great FICO score, making sure you have some money to put down, at least 3 to 5%. And that's not including closing costs, right? So if you have all 3 of those, you are what's called in the lending world a paper. So if you have a salary job, I would say that's like the top, the cream of the crop, right? High salary job, with commissions, or if you have a business and you're actually putting in your tax returns that you're profiting a good amount, that's also another great thing. Even if you're an hourly worker, but you're showing you have 40 hours a week consistently with overtime, right? That's a paperwork. You have a 700, 720 FICO score. You got at least 10% down and a padding for any closing costs. That's an A paper, and you deserve to have the best interest rate there is out there possible. So just to know, who you are and what the bank looks at. Now, again, if one out of the 3 is lower, that's totally fine, right? But just know it's a little higher risk to the bank, maybe a little bit higher interest rate, and you might have to put more down, whatever the case may be. But that's exactly why you meet with someone like myself, a loan officer, to get it down. And this is the time, like let's say a football analogy, this is where we make our plays, right? When we're talking to a lender, you are making your plays. Here's our plays. I can I get all your documentation and say we can go with play A, play B, play C. And once we have our plays, you go with an agent, and that's when that agent, who's the quarterback, is really, going to pass you the ball and go with whatever play that we need to go with. So, you don't want to go out in the field and not know what kind of plays we're going to run, right? And that's what a lot of people do when they try to look at houses before talking to a lender, right? You need to get with the lender first, know what kind of plays you're going to be running. And then once you're out there with your agent, boom, maybe the agent's the running back, I don't know, however you want to slice it, right? They're going to be out there in the field with you, you know what I mean? And that's when you pass the ball to them to get that touchdown and get you that house. So, yeah, I think that's the overall gist of that. So to recap, look at the 10-year treasury. If you really want to know where interest rates are at, and this is no matter what bank you go to, they're going to look at this. They're going to look at this, and this is where they're going to base their rates on. So you can know before they know if interest rates are going up and down. You can even bypass me by looking at the 10-year treasury, because that's what I look at. And then the mortgage interest rates it's going to be a lagging indicator from the 10-year treasury. It doesn't update right away, but you can pretty much tell where the rate's going to go based on the 10-year treasury. So if you want to educate yourself as a home buyer, definitely have that on your radar, have that as a ticker to see where things are at. Don't look at the feds. I don't know. That's a very amateur move, and I think I'm going to adjust my presentation on that, but definitely look at that. And then number 2, get with the lender and make sure the 3 pillars, down payment, credit, and income, right? Income documentation. Those 3 are the 3 main pillars. There's others, right? But these are the 3 main pillars to get you a loan. And I would say as long as you have those 3 ready to go, you'll be ready to go in any market.
Preparation, man. Like everything else in life and success, preparation.
Exactly. So I think that's my message for tonight.
Hey, we got a bunch of people watching live on YouTube and X. If you're watching this, have questions, put your comments there, put them afterwards. We'll come back and circle back to them.
Yeah. Put your questions there if you have any questions on how to get qualified, the market. Yeah.
If you miss Patricia, don't say anything. But if you did miss her, put in the comments that you didn't miss her, that Bill and Shannon did a great job without her. And we'd like to hear that. We love those positive comments.
Yes, we love the comments, guys. And unfortunately, Patricia, if you're watching, we miss you.
No,
I
actually enjoyed this without her. It was really nice actually to chat with you.
Well, I knew she was gone, so I'm like, let me get some bullet points on what to talk about, so that way we have a good class and learn a good amount on the loan side. So, and also too, the last thing I want to say is I have no idea why this is coming up a lot, but people that carry cash really want to talk to you guys, because at the end of the day, the bank is always going to want to see funds on paper for the last 2 months. And a lot of people are asking, cash is king. Why aren't you taking my cash? Take it, take it, take it. Look, listen, guys, a lot of people are asking, why isn't the bank taking my cash? And I ask them, why aren't you putting your cash in the bank? And they tell me almost unanimously, I don't trust banks. So I'm saying, wait a second, you're asking money from the bank, but you don't trust the bank, right? So if you want money from the bank, you got to play the bank's rules.
Yes, they're like the mafia. You got to pay the vig to the man. There's no way around it. If you want his money on a loan, you got to put it in the banking system.
Exactly. So you have to have that money in the bank for minimum 2 months, right? Minimum 2 months, because again, these banks want to make sure you're not money laundering. That's just the facts. Okay. They don't know who you are. They don't know that you're a good person, that you just, like to carry cash. They don't know that. Yeah. All they're thinking is, what if this person is money laundering? Right. Where did they get this money from? That's all they're thinking. Right. So, and unfortunately, I can't put on this letter, this person's a great person. They just want to put their money, in the mattress, but I can assure you everything's on the up and up. A letter's not going to do that. They want to see money in the bank for at least 2 months. And like Bill said, if you want to play by the mafia's rules, if you want the mafia's money, you got to play by their rules. And
it is. You have to like that. That's just how it is.
Exactly. And same goes with me. Hey, look, I got to play by their rules. My job is to make sure that by the time we present your file to them, you look so great and that they're going to want to give you their money. That's my job, right? Is to be the intermediary between you two. So I would just say that when it comes to cash, it doesn't matter how you can have $1 million in cash, right? Unless you want to pay the property in cash. And even then people are asking me, can I just give the cash to escrow? I'm not sure if I don't know. Can you do that, Bill? Can you give, let's say you have $1 million house. Can someone give a cashier's check or just, a box of money to escrow? I don't even know. Can that?
Well, cashier's check, yes. Escrows typically will not handle green counted cash. Now, anybody is willing, look, let's be honest. If you have $1 million and you want to pay somebody, there's somebody who's willing to take that money for $10,000 and launder it for you, or $100,000 and launder it for you. That's called money laundering, right?
Yeah, we're not advocating that, by the way.
No, I'm saying that's called money laundering, and people go to prison for that. So that's a choice, but then you can't buy a house because you're in prison. So that's not the option we're recommending. Look, can you deposit money over time? There's limits. The feds are going to probably find out. Do people do it? I'm sure. I'll never forget when I was a loan officer back in the late 80s. And I don't know that you remember the story of the fall of the Philippines with Marcos. And Marcos, Imelda Marcos was like this wealthy, like they'd robbed the country, the Philippines, blind, and there was an overthrow of the government, and they left. And it turned out they're also running a lot of drugs through the Philippines at that time because of all the different islands. And I remember I was doing a loan app, and this customer, the man was Filipino, and the woman was Colombian, which in those days was big with cocaine trafficking. And I asked for the deposit for an appraisal. Normally in those days we would get a check at the application. And it was a big house in those days. It was like $1 million house, which was huge in those days. And he had to give me a $500 check. $500 was the cost for the appraisal. And the guy counted out 5 crisp $100 bills. And I mean, I could almost taste the cocaine dripping off of it. And I wasn't sure if it was her money laundering or his money laundering. And look, there are people who go through life and pay cash. That's fine. But if you're going to buy a house, you got to get it into an institution somehow. I deal with, I'm a property manager for a company. We lease properties to cannabis companies, and they can't bank, and they find ways, innovative ways to process their cash. They're always looking for discounts. They're always looking to pay for things in cash to trade. And that's part of the job if you're going to do that legally. But if you're going to do it illegally, I don't want to know about it. And don't tell your loan officer about it. Don't do it. Don't do that crime unless you can do the time. So.
Exactly. Well,
okay, that said, let's work on saving money, cutting our expenses, building our wealth, monitoring our credit, getting our paperwork right, getting with Shannon ahead of time so we're ready to go. Let him get you all set up and ready to go. I get calls all the time from buyers. I want to buy a property. And, okay, great. How are you going to pay for it? Well, I'm going to get a loan. Okay, well, have you talked to a lender? No. Wah, 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 wah.
Yeah.
You're not buying the house. It ain't going to happen today. It ain't going to happen. So,
yeah.
Okay, Sharon, closing words. Where can somebody find you? And what do you have going on this special this weekend, if anything? And how can we find you?
Yeah, so obviously my phone number is there, 661-317-8484. My consultation is free. My pre-qualification is free. And yes, it does cost lenders to do a pre-qualification because it costs us money to run your credit. So, but it's free to you guys watching, and you can text me, call me, or my Instagram, FUND Fund with Shannon. My OnlyFans is on the way. Right, fun with Shannon. We're removing the D and going there shortly.
That's my joke. You took my joke away from me. I use it every week.
All right, next time I'll give it back. I give it back.
Fun
Now,
with
if Felicia's
Shannon.
not here, I gotta take everything I can.
Okay. And I'm Bill Gross at Bill Gross Probate, and we do this every Wednesday, either 4 o'clock or 5 o'clock. If you come in live, love to have you guys ask some questions or participate. Appreciate you guys. Let's see here. Do we have any comments before we go? I don't see any. But boy, we got a bunch of people on X.
Oh,
and
nice.
YouTube as always, and on Patricia's YouTube. So thanks, guys. We'll see you guys next week. And Shannon, thanks for your help today.
Of course.